Hello. Welcome to the channel. This episode is related to Luokung. We are going to talk about news and movements related to Luokung. First, let's see the stock movement for LKCO. Today, February 7th, LKCO stock suddenly jumped to 0.63 with a big increase of 24.31%. At today's peak, the stock reached as high as 0.75 with an increase of about 48%. The increase has been accompanied by a big trading volume increase. Today's volume is 11.38 million. The average volume is 2.76 million. For retail investors, we may not know the exact causes of today's big stock movement. As such, we may just consider it as the butterfly effect, which may occur in stock market, particularly for penny stock. The butterfly effect is the notion that a small initial factor may have a part in determining greater and unpredictable changes in large, complex systems. One of the butterfly events may be related to a Luokung webinar reported on forcefamilyoffice.com. The link to the event is presented in the description of the video. The title for Luokung's webinar is Technology That's Driving Autonomous Vehicles. The webinar date is February 23rd. Next about the webinar event. Why are leading automotive companies including Mercedes-Benz, BMW, Toyota, Ford, Volvo and others all working with Luokung to power their autonomous future? Luokung technology has developed a high-definition spatial/temporal mapping system that will allow vehicles to drive themselves through even the worst weather safely and comfortably. Luokung HD mapping technology is at the foundation of autonomous driving systems that also include radar, LiDAR, and cameras to ensure everyone reaches their destination safely. People have not heard about news from Luokung for quite a long time. This sudden news event may increase the butterfly effect to some extent. Next, let's see why LKCO stock has dropped so much for the past 6 months. Here is LKCO stock 6-month chart in comparison with that of Russell 2000 ETF IWM. The lower curve is LKCO. The upper curve is Russell 2000. As you can see, LKCO follows Russell 2000 or the general market closely with the same declining pattern. Both reached the new low around here on January 1st, this year. For the past 6 months, Russell has declined by about 10%. LKCO has declined by about 70%. As a penny stock, LKCO has dropped much more. Luokung's fundamental has not changed. The big drop may be due to 2 main factors. The first factor is the general declining market that has forced LKCO to go down with the market. The second factor is the delisting fear after LKCO's drop below the $1 mark, which may have accelerated the decline. It is interesting to note that LKCO has faced the delisting before, and then recovered. Next, let's check the chart and compare the situations. Here is the 1-year stock chart for LKCO. About 1 year ago, around February 7th, the price was 0.72 below the $1 mark. And then, only 1 week later around February 16th, the stock jumped sharply to $3. Can it repeat the same this time with the mandatory recovery to above 1 from today's 0.60 price? No one can give a definite answer for sure. But we can check the differences. For the last delisting recovery, the general stock market was hot and on the big upward trend. This upward trend might help speed up the recovery. With regards to the current delisting recovery, the general market is on the downward trend. This may hinder or slow down the recovery. But, on the other hand, since then, Luokung's revenue has been increased quarter by quarter, and almost reached the break-even point. The fundamental has been increased significantly. Next, let's see the possible scenarios related to the delisting issue. There may be 3 possible scenarios/results for LKCO stock. First scenario. 1. Stock price organically rises above $1. This may require good news being released from the management to boost up the stock in a timely manner. Next scenario. 2. Reverse stock split. The company may use the reverse stock split to increase the stock price above the $1 mark. This may not be a good option, as the general market may not like it. Many penny stocks may still keep declining after reverse stock split. Next scenario. 3. Listed on OTC. This may be a worst-case scenario, but not the end of the world for LKCO. Let's take Luokung Coffee for example. Here is Luokung Coffee stock chart. Luokung Coffee was delisted and moved to OTC market. The stock reached a low here around 1.39, but since then has kept increasing and reached about $16, an increase of more than 10 times. Anything has pros and cons, and the same with LKCO in OTC. For example, if LKCO goes to the OTC, the worst case may be over, and the stock may not face the delisting downward movement pressure and may start the upward movement again. After the price increase to a certain level, the stock can be relisted in the Nasdaq. In the long term, the most important thing is the revenue growth and the reaching of the profitability, not the price fluctuation in the market. Next, let's review the revenue growth. In one of the previous episodes for Luokung, we have reported the management anticipation for the revenue of the last year. Closing 2021 on a strong note. Meeting goal of 2021 annual revenue of $100 million. The $100 million annual revenue is expected to corresponding to the break-even revenue point for the second half of last year. If Luokung can maintain the revenue growth without increasing R&D investment, it may reach the profitability for the first half of this year. Again, the key is the revenue growth. You may keep close attention to the coming report on the revenue growth. Thanks for watching. This channel gives you update and info on Chinese stocks, technologies and culture. Please subscribe.